All right, what's going on, guys? Here to make a couple videos for you for January 24th, as requested. We're going to start by talking about some different technicals here. Omar had asked, what does it mean when what some of these lines are crossed and things like that. So I've got a ton of indicators here. I want to go over with you and talk about some of these you guys probably already know. So I'm going to go ahead and X out all these here and deselect them, and we'll go here. So here we just have a plain chart, right? We're looking at Tesla, the day trader's favorite, and we can actually, so this is the 1 minute chart from Friday, looks like, and yeah, the 22nd. And so we're just going to look at different things here. The first thing we're going to look at is the moving averages, right? So these two lines, moving averages, we have the blue line, which is, we can see is our 10-day moving average, and then we have the 60-day moving average, which I have set in red. So the 10 days obviously going to show the moving average, of the stock in a shorter period, while the red is going to show it in a longer term period. And if we change this, to a daily chart for Tesla, and then we can see on this day how much it changed, on this day how much it changed. Anyways, on a daily, we see these two moving in, and it's going to represent a little bit differently. So the moving averages can create what's called a golden cross or a deathly cross, which is where the averages cross one way or the other. Usually, and Tesla is kind of a bad example on the daily, because back all the way in here in April was a deathly cross where the shorter moving averages cross below the long range moving average, and in this case it was because of the drop in March, where we saw with COVID and everyone panicked a little bit, and that sell-off is relatively small in comparison to everything that's happened. But then on the reversal, golden cross, a lot of times that people call it, is when the opposite happens, when the 10-day, the short term, crosses above the long term. And Tesla is not a great example of an extremely up and down stock. Tesla just only goes up, stonks only go up, where it crosses it, and then the sky's the limit, and it just goes and goes. And because it runs so much, like in here, for example, it runs so much so fast that when it does start to take a reversal, the averages have been affected so much that it doesn't do much, and they don't even come close to crossing again. It takes a while. Tesla has to really flatten out. And then right in here is where we see the build as Tesla's added to the, a news for the Tesla being added to the S&P 500, and then, explosion again. And people are thinking, oh, maybe this is it. It's really starting to narrow out. But of course, if we want to take, time to look at that, like we've looked at charts before, it's not hard to see that, Tesla's putting in right here a wedge, like we've talked about before, right in through here. Oops, looks like it didn't get another one for us. Come on. There we go. Not hard to see. Putting in a wedge right here, and then boom, broke out on the daily. But yeah, and so then with that, we get another cross, and sky's the limit. So that's the moving average, and we're just going to reset the chart here. Oops. And delete that. Let's see, how do we delete that? I know there's a way to. That's right, we can leave it there. All right, so that is the moving averages, right? So we can look at that indicator. Let's go back to the minute chart here and zoom it in a little bit more and taking a look at Friday again. So we did the moving averages, we'll get rid of that, and now we're gonna go into the next indicators right here. If you're using Webull, any other stock platforms got indicators in different spot. Let's go to Bollinger Bands, right? So this is the one where a lot of times when I'm looking at charts on TradingView, we look at Bollinger Bands. I just have that set. Bollinger Bands show a few moving averages, and then it's a combination of a lot of different things. And so the 20-day moving average versus a different moving averages, and then like an average middle of how it's trading that day. Bollinger Bands can be set up differently, so that's why I don't give a specific on this, because there's so many different kinds, and you can go in and specifically set what you want each band to represent. But what you need to know about them for day trading and stuff like that is they work with volume and price action. So usually the stock trades within these three lines, within the Bollinger Bands. And if a stock is in a bearish trend, going down, then in theory the bottom of the candles will bounce off the bottom of the three Bollinger Bands. In this case, the gray, as you can see here. And if a stock is in a bullish, generally bullish trend, which is right here, is a good example. The stock's going to bounce off of the middle line as the bottom of the candles, and the wicks are going to be hitting the top. Here we have bottom on gray, wicks of the top on blue. Here in a bullish, wicks on the bottom, and then on top of black. When we see a lot of buildup in volume that gets tight and things are going to squeeze. So when I say stocks looking to squeeze, either I'm seeing it coming to a wedge or I'm using Bollinger Bands. Usually what we see is a stock or the Bollinger Bands start to come closer and closer together. And right here is a great example of that happening. And so the Bollinger Band's kind of sideways action. We can see down here the volume's pretty low, right? And the Bollinger Bands get tighter and tighter because that price is not fluctuating much. It's staying right in this range of 139 to really just 139 all around, and trading cents within that 139 range. For a penny stock, obviously it's going to trade in a different kind of range, narrower range, and so that's what we're looking at here. Then finally we see a huge uptick in volume right here. We get this candle that looks like traded 46,000 shares. I'm looking at this number up in here. With each candle it represents a different amount, how many shares are traded in that minute, right? We're looking at the minute chart here. So right in here, this candle, 46,000 shares are traded. It was more towards the buy side. These Bollinger Bands squeeze together, and that's the indication. Breaks out above, boom, and then we start to see this rocket up into close here, which Tesla Friday at close has a typical, it's typical for it to do that. It's something to note. So that's how Bollinger Bands, you can trade them using those three lines. Seeing how they're going to bounce. What's the trend look like? They're very important. Okay, now let's look at the VWAP. And man, I should have looked at the VWAP again, researched it before I started making this for you guys, because I haven't traded with the VWAP in a while. But it is a great indicator of price action and volume. And what I do know, I can't give you the explanation on exactly what is used to indicate or to have the VWAP be put on the chart. But I do know that if a stock crosses above the VWAP, which is like I think it's a volume weighted average price. Yeah, I think that's what it is. It's been a while since I've used it to trade, but it is really useful. Because I've been doing options, I don't use it as much anymore. When I was day trading, pennies more and small caps, it definitely comes into play. And when a stock breaks above the VWAP and can hold above the VWAP, it's really a bullish signal. And so Tesla, we see a red to green cross. This was right in here when I called out on Friday, red to green Tesla. I think it was in here, or maybe it was a little bit higher. I think it was in here. But Tesla goes red to green, crosses above the VWAP, and we see volume start to pick up a little bit, and then it ran a little as well. Usually, if a stock is staying in a general trend of a bullish chart, then it's going to use the VWAP as resistance. So here, after it breaks, the VWAP becomes resistance right in here, and then here's a false break underneath, and uses the resistance and keeps going and stays above. If a stock breaks down below a VWAP strong, then it's usually a good indicator that we need to get out and sell. All right. Okay, MACD. MACD uses these two, and this is a really good spot to use the golden cross with the moving averages right in here. If you don't want it messing up all the candles in here, it's going to use those moving averages and also show the volume, buying and selling volume as things go. So here we see a lot of buying volume, right? It correlates right in here in this chart. And then sell volume and how strong the sell volume is, and uses that. So you want to, you can use this. Okay, looks like we've had a lot of sell volume in here, starting to curl out. Now here's where it would kind of trick you, and it looks like in here maybe we're starting to get it. People, maybe we're picking up some buyers, and then we have a little bit less, and then we come up again. And so yeah, it's just another indicator to bounce off. Which way is it? And you can go back and look at how a stock's been performing in the day. Even count how many candles are we getting within the MACD before we see a jump to the green side. We'll get rid of MACD and go RSI. RSI is a relative strength index. We see a 30, 70, and all the way to 100 here. To put it in a nutshell, and you guys can go look at this more on Investopedia, but to put it in a nutshell, you want to buy in the 30s, right, low, and then sell in 70s, and it follows up and down. So if you have the ability to day trade and you can go back and forth, you want to make a big move on something, real quick, then this is a great indicator to use as well, the relative strength index. When you see something move like GameStop did on Friday, which we'll go over here shortly, it doesn't work the exact same way. Where this relative strength index, it just kind of gets blasted out of here and just pings out in the hundreds. And if something's way over here, in theory, it's super overbought, right? You don't want to be buying if the relative strength index is all the way in the 70s or in the 90s. On some things it defies this, but as a relative rule. And then of course volume, which you guys understand really well. How many shares are being traded per whatever the time indication that you have set for your chart is. In this case, it's a 1 minute candles for Tesla. So each candle, right here we're seeing 80,000 shares traded in a minute, 56,000 shares, 63,000. That's an interesting candle. 63,000 shares traded, but not a lot of range. So some tight hands there, and then 69, 128,000, right? And at the close of the bell, we always see really big movements. People putting in big numbers at the end. At the last candle of the day, we see almost, we see 3/4 million now, 749,000 shares traded. So that's interesting. And those are some of the main indicators that I use when I'm trading those, and they work for options too if you're trying to flip something quick within the day. They're really important as well. There's a lot of other videos I'd recommend if you really want to learn all of these and like in depth. The chart guys on YouTube. That's all you got to search is the chart guys, and I'll actually put a link in the description to their video as well. They have it says how to learning how to trade crypto or whatever. That's how I learned to trade cryptocurrency, was through their videos. But the explanations that they have for these indicators and reading candlesticks and things are really great as well. It's just a long course. I think like one video is an hour long per video on learning how to do it. And it's like a 15 or 12 part series. So if you really want to do it, but what I explain these in a nutshell, the thing is, you don't have to know exactly what everything means and what makes it do what it does. You just have to understand, how to trade with it. And easier said than done. But yeah, so those are some of the indicators that I use a lot to trade. The Bollinger Bands, like Omar was saying, are really useful and good if you can get that squeeze right. And you might get a squeeze on those, and it's not the one that breaks out, and you just hold a little bit longer. If that range stays really narrow. But that's it. I'll shut my mouth, and then coming to you guys here in a few minutes, I'll have the picks for Monday and a look at the theoretical short squeeze from GameStop. I'm not sure if it actually was a short squeeze. We'll look into that.